We're thrilled to introduce our next keynote speaker, Fahad AlSharekh, General Partner at TechInvest. Fahad brings a wealth of experience in VC and here and abroad. Today, Fahad will delve into the role of sovereign wealth funds in the venture capital space. Fahad will shed light on the influence of those funds in shaping regional investments and whether he supports a more active role for sovereign wealth funds or advises caution. Fahad, the stage is yours.
Assalamu alaikum. I need the presentation on the screen. Thank you. Thank you. طبعا هنتشرف نوقف اليوم معاكم في مؤتمر الجريدة ونشوف أصحاب السعادة والسيدات والسادة الحضور الكريم. كالعادة طلب مني أن أتكلم بالإنجليزي، فاسمحوا لنا العرض بيكون بالإنجليزي عشان عندنا ضيوف من برا اليوم. وسعيد جدا في رؤية العديد من الأصدقاء والزملاء. شكرا على وقتكم على الحضور، وإن شاء الله يكون البرزنتيشن في بيانات ومعلومات جديدة. اليوم راح نتكلم احنا على سياسة الصناديق السيادية في الاستثمار في الكتابات الخاصة، بالذات في ما يسمى في الجروث كابيتال أو يسمى في الفنتشر كابيتال، وهي تقريبا نفس الشيء اللي هي اللي يسمونه، أنا ما أحب كلمة الاستثمار المخاطر لأن كل شيء فيه مخاطر. تشتري عمارة ممكن باكر تخسر، هو يسمونه الاستثمار الجريء لأنه يبي له فترة أطول للعوائد اللي ترجع، بس تكون العوائد بشكل أكبر. فيعني high risk, high reward, and that's the strategy we follow. The sovereign wealth funds, the regional sovereign wealth funds also like that strategy very, very much. Sovereign wealth funds have an objective, which is to offset the dependency of the government, of the single source of revenues that we have here. دول الخليج الخمسة معتمدة على تصدير النفط. So these are hydrocarbon economies. We export hydrocarbon, we make money, we reinvest. Now, that was a great strategy up until it became fully dependent on it. And today we need to diversify. Diversification is essential to long-term economic prosperity. Without diversification, you are facing high risk. Oil prices are fluctuating. There's geopolitics involved. There's supply and demand based on renewable energy. There's many factors that will disrupt the flow of capital coming from a single source like hydrocarbon. So sovereign wealth funds are there to offset that reliance. At the same time, it's there to offer a cushion for the government in case there is a dark day, or help finance industries that need to move to the region and help diversify the economy. So the objectives of sovereign wealth funds usually is to get up to 7% a year. Very conservative investment. And the idea is to compound it after 10 years and double the assets under management. It's a very simple formula. It's a very difficult formula to achieve. How do you get 7% on 700 billion so that every 10 years it becomes double? One of the strategies they decided to look into was private capital markets, which is private equity. Private equity is a strategy, an asset class that's been proven to add value to that diversification strategy because it gives you exposure to higher returns if you go in early at the right time. Of course, private equity comes with risk, just like any other asset class, and it has to be done right. It has to be done in the right strategy, with the right manager, the right timing, and knowing exactly what the long-term objective is. So that's the intro to this. We'll move to the next slide. So that's the objective. I kind of went through it today, but we will discuss which GCC funds are embracing VC, what are their trends, what are they looking at, and the future. Again, in innovation and growth. اليوم we hear a lot about AI. We see a lot of companies, and like OpenAI today became part of our life, ChatGPT. And it's a 10-year-old company, but no one heard about you know, 3 years ago. And many other companies today, we see NVIDIA for the public traders. It's a $3 trillion company. And a couple of years ago, no one even heard of a GPU. So we will now figure out, you know, what is really going on. Second slide. So as we can see here, this graph basically explains to us that the hydrocarbon versus non-hydrocarbon dependency. And see, I started with this year, 2024. Then we all know what happened before. Let's see the future. So the future looks like it's a non-hydrocarbon focused economy. People want to do things outside of the norm of oil and gas. And so what we want to do today is figure out what are the GCC initiatives that are taking this into consideration and doing it seriously. Today we have initiatives مثل Saudi رؤية السعودية, Saudi Vision, UAE Vision, and their main objective is diversification. Diversification. Also, they're expanding a lot into finance and tech. So we see that as a very, you know, essential part of that diversification strategy. And today, you know, whether it's PIF, Mubadala, QIA, and the KIA in Kuwait are all directly investing in companies and indirectly through managers. Next. This is a quick idea of how big are the sovereign wealth funds in Al Khalij. I chose the top 5: Mubadala, KIA, QIA, PIF, and ADIA. But there's a few missing here, by the way, like تأمينات الكويت, تأمينات السعودية, ADIC, بالإمارات, a few others. But just these, we manage 3.5 trillion. So I think there's about $5 trillion in sovereign wealth funds in the GCC. And what they want to do is, you know, as I said, you know, high growth, long-term investments. And today, we're watching a major focus, as I said, on AI and microprocessing between OpenAI, NVIDIA, Mistral in France, you know, Anthropics. There's a lot of talk on AI. Next. Sovereign wealth funds direct investments by sector today. If we look at it, everyone loves real estate, and so does the sovereign wealth funds. It's about 15 billion. But right next to it is tech and telecom. So people don't realize how much tech and telecom is actually a very material part of the asset allocation of the sovereign wealth funds. And of course, we have infrastructure, finance, and others. But I just wanted to say that the telecom part is very important as a strategy because of the high growth opportunities in tech and telecom. So that's why they like that space, because high growth potential companies that pop up and break out usually come out of tech and telecom. Telecom, for example, today everyone wants to build a data center. That's telecom. Everybody wants to host in the cloud. That's architecture, that's telecom. So they're very much correlated. Next. Here also we have a breakdown of where do they like to invest in direct investments in tech and telecom. So we see here that since 2015 up until the COVID tech bubble, there was a lot of focus on early stage, which is seed, like an ideation phase. Growth is once the company has some sort of analyzable business, some sort of analyzable data. Revenue sometimes is considered also growth. And then late stages, when the company is big and it's raising a lot of money, we see some companies like OpenAI, for example, recently raised at 150 billion valuation, about $7 billion. So that will be a late stage transaction. And then pre-IPO is literally the round before the IPO. So this is one of the rounds that people do for liquidity. So in 2023, so 2022, of course, was the correction that was realized in the States. There was a major correction in public equities, which affected immediately the late stage market and the pre-IPO market, and we saw a big drop in valuations. But it didn't stop. 23, people are still investing, and if you look at 23, it's almost back to 2017, just a little bit less than 2017, which makes it, you know, the right time to go back into the market, because the best time to get in after the correction. And that's the case I'm going to build right now. Next. The unicorns are basically the late stage companies that are taking all the capital. You guys are all familiar with what a unicorn is. But what I'm highlighting here is that there's still over 1,500 unicorns out there today, which are late stage companies that are valued, over $1 billion. And that's, as a matter of fact, there's more private companies in unicorn status than there are public companies in unicorn status, which means there's going to be a lot of companies going public when the right market conditions allow for it. Most of the sectors, of course, are in technology, is the #1 sector for unicorns. And the sovereign wealth funds have been increasingly backing these unicorns. An example of GCC-backed unicorns are Uber, Global Foundries, the microprocessor, and of course, OpenAI. And you'll be happily surprised to see how many of the regional funds have been investing regularly over the past couple of years in OpenAI. And the chart here proves that yes, in 2021 and 22, there was lots of unicorns being created based on trends, but then 22 happened, 23 crash happened, 24, we're back at 2019 and 2020 numbers. We're back. This is not 22 anymore. And so ideally what happens usually happens, and economics are different over decades. But after a correction, usually it takes 4 years for the next wave to start. So now we're seeing the beginning of the next wave, and I think it is the best time to enter the market. And based on this data, unicorns are being created today based on merit. So with all the scrutiny that these companies get because of the correction that happened, they're still being created, and in the double digits. Thank you. Next slide. Again, the lion's share of unicorns is information technology and tech companies. Tech really is where the value creation is being made. Next. So this is an example of successful case studies that have been backed by regional sovereign wealth funds. We take Mubadala has several, but I'm choosing Global Foundries because A, it's a microprocessing, it's a chip manufacturing company. And today we all know chips because of NVIDIA, but Global Foundries is also one of the best companies out there. And Mubadala has been not seeding that company, but investing in that company for a long time. And one of the largest shareholders, and they just took it public. And the company now is at over $24 billion, a very serious company. And I salute Mubadala for that great pick. The Saudi PIF fund, of course, is in several unicorns, but I'm choosing Uber as an example. They invested directly $3.5 billion in Uber, acquiring 5% stake in the company, and everyone called them crazy because I think it was a $50 or $70 billion valuation between the two numbers. It was fluctuating. But today is $150 billion valuation for Uber, and it was a very good investment by PIF. PIF has a subsidiary called Sanabil, and Sanabil focuses on venture capital. They do most of the direct and indirect investments into managers and funds and into direct deals. So Sanabil today, we see them in Mistral AI. Mistral is probably the most interesting AI company outside of America. It's based in France. And people like Mistral because they don't have the containment issues or the guardrails in AI that the US has, meaning that it's open. And so some people that want to, play with a large language foundation model that doesn't have any limitations, you can go to the French. And you can trust the French, of course, of being so liberal and out there. And so Sanabil, I'm happily surprised to see that they have a material investment in Mistral. And the company today is almost a $7 billion company, although it's a few years old. And lastly, Databricks. Databricks is one of the most interesting data companies out there. People think of AI as, the engine that thinks and the reasoning, logic sort of algorithm. But the main foundation of any AI is data and data science and data management and data lakes and all sort of data sifting products. And Databricks is actually one of the best companies there, backed by NEA and backed by several of the top Silicon Valley people. And it's very, very, very encouraging to see that Sanabel is part of Databricks. Next. The Kuwait Investment Authority. Some people are in the KIA here. This information is private. It's impossible to find information about the KIA, but this is stuff that we found online, so don't worry, it's published, and it's pitch book data and other data. But this is an example of how the KIA invests. And so we look at the KIA, they do focus on, you know, B2B businesses, large business infrastructure, but they do have a big chunk in information technology. I was an advisor on the Thumbtack deal. That was done about 2015. They like the growth stage. They come in at the growth stage. So the company, the KIA has a criteria of like 27 qualifications that require literally a unicorn. If you find it, they will do it if it ticks the boxes, but it's impossible to find things that tick all their boxes. But this is an example of companies they did. KIA actually just invested materially in OpenAI. And that makes us as Kuwaitis very, very happy and very proud that OpenAI has, I'm taking a guess just on the information I know. I think KIA has just about over 1% of OpenAI. And also, they have over 1% of Google, Alphabet, and 1% of Apple. Yes, they're public companies, but it just should give everyone here a sense of comfort that the Sovereign Wealth Fund of Kuwait owns 1% in the most important 3 companies out there, out of the top 10. So this is a good highlight of, and of course Lyft, if you know, that was the contender against Uber, and it was a very successful IPO and returning investment for the KIA. Next. So here, what I'm trying to sell here in the chart on the right is that VCs continue to invest in tech development anyway. But specifically, every time there's a new trend, the money just somehow appears. There's a lot of dry powder. The investments are not going to stop. There are funds and fund of funds and all kinds of emerging managers and established managers that have lots of capital that continue to invest. So we saw the 21 and 22 crash, but somehow all the money popped up and everyone started investing in AI and machine learning startups. So VCs have continued to invest in high growth opportunities. They don't stop. VCs today prioritizing scalable AI because they saw the effect it had on all of us. Generative AI, which is very basic AI, like ChatGPT, changed our lives. Now imagine when it becomes more sophisticated and focused on certain verticals and really disrupting industries. And so the money is there. And therefore, VC will always continue to invest regardless of what trend and based on cyclicality and based on issues happens. It doesn't matter. The money's there, growth is there. Companies will continue to be, you know, founded and bred and enlarged based on that successful model. Next. OpenAI. So OpenAI today is quickly becoming one of the largest private companies in the world. It is so big that it's bigger than all these companies before they went public. So it's one of the largest private companies in the world today. And it's a $150 billion valuation. So whoever's investing in it thinks this is going to be a 5x company. So it's going to be a $6 trillion, you know, where's it going to go? You know, a trillion, 2 trillion, 3 trillion. So if you look at NVIDIA and Alphabet and Microsoft and, you know, they all are, you know, over $1 trillion companies today, and Apple. And so this is where these companies are going. And so that's why the sovereign wealth funds are investing in these companies, because they know they're going to go to that at some point, regardless of what's happening in the market today. So, you know, the market was awful in 1999. Amazon was struggling in 1999. Today, Amazon is the biggest company in the world. So you should have invested in Amazon in 1999, and you should have hold. You should hold and compound and not just trade. This is the strategy that people need to understand when they're doing growth investments. It's a holding game. Everyone likes Warren Buffett. Everyone wants to be Warren Buffett. Everyone sits here and starts, sharing memes about Warren Buffett on Instagram, but no one wants to do what Warren Buffett does, which is hold and compound, right? I see someone here who, when we had the Palantir, right? You held, you didn't sell, right? So that's smart. So today, sovereign wealth funds like Mubadala, ADQ, and KIA have material exposure to OpenAI directly, which means on the cap table in the last equity round, indirectly through the managers they manage funds on their behalf. So OpenAI today is becoming one of the biggest companies. With this market conditions, still this company happened to be bigger than anything we've ever seen in history. So clearly, there's something good happening in the space. Next. More on OpenAI. So today it's at 157 billion valuation. It just closed the last round. Many participated in this round, including the Kuwaitis. This is Series B+, which means there's going to be another round, a C, a D, and E possibly. And the last one was led by Thrive Capital, October 2nd. Okay, so a couple of weeks ago was the last round done in OpenAI. Thrive Capital is Josh Kushner, not Jared Kushner, Josh Kushner, his brother. And he's one of the most successful venture capitalists, I think, because in a few years he built one of the best funds, and he comes to Kuwait regularly. This is a highlight on OpenAI. So it works in artificial intelligence, machine learning. It's also considered cloud tech and big data, also software as a service. It's raised 22 billion to today at a valuation of 157 post. And from the last valuation till today, it's a 5x. So if you invested in the previous round, you would have made the last previous equity round, you could have done 5x already, but on paper, because it's not public yet. Next. Opportunities in VC. This is a graph that I updated since I spoke on this platform 2 years ago. What I'm trying to say here is venture capital is one of the best returning asset classes. Today, people ask me, is it public markets? Is it gold? Is it FX? Is it real estate? What shall we invest in? First of all, whatever you decide to invest in, if you're not very smart, you're not going to make money. So no one can help you with your own aptitude. You need to be an intellectual person that reads and knows how to do research and has good judgment. Because no matter what you do, if you don't have a good judgment, you're not going to make money. We see a lot of super real estate projects. People are making a lot of money in real estate. We're also seeing devastating foreclosures on real estate. And people are losing it to banks and losing to the courts. So the smart people make money. The not so smart people don't make money. And so I'm assuming here people are smart. And so if you're smart and you know what you're doing, if you will look at, this is what I need this. So what I'm trying to say here is this is US venture capital on average. So it's not the best firms, it's not early stage or late stage, this is an average. And these are the other asset classes. So if we look at the 10 years here, 15.3 is from venture capital. And here NASDAQ is 17, and that's because it's the venture capital companies going public. And over 20 years and 25 years, you see the best performing asset class, if you hold, like the sovereign wealth funds, is venture capital. And this is also average venture capital, not early stage. If we do early stage, it's even higher numbers. But I'm just doing an average because this is the space that sovereign wealth funds invest in. So VC remains to be the best long-term investment asset class. This is data, it's not my opinion, and this is Cambridge Associates. And number two, it's, if you're looking for, sovereign wealth funds are looking for impact, and they're looking for financial performance, and they have a long-term investment horizon. And so, that's why I like it here. 5 years, 18, 10 years, 15. And so if I want to invest, I'll probably invest in VC, but I would choose early stage. Sovereign wealth funds choose late stage, and this is the best strategy for them according to the data. Next. Things can go bad, okay? I said Mubadala were great for doing Uber, but even people like Mubadala sometimes can have exposure to bad managers or bad strategies. So the SoftBank Vision Fund raised 100 billion a couple of years ago, and then it went down. It was very bad. It's a very bad fund. But recently, they returned the initial capital because of an exit they had in ARM. And ARM is a chip manufacturing design company. And so, which is also old, but somehow it got relisted. And so they returned the money with a negative of 2.6. So 100 billion minus 2.6 is what? 97.4 billion was returned. So people are happy the money is back. But let's think about this. I just said sovereign wealth funds need to make 7% a year for it to compound. So you actually lost 7% a year over, so 100 billion, 7% a year is 7 billion. Over 5 years, it's 35 billion. Over 206 billion, it's about a loss of 40 billion of unrealized opportunistic cost and, you know, and losses. So you need to know what you're doing and need to give it. I don't know them personally, but I would. KIA did not invest in sovereign, by the way. They passed on this twice. One of them, again, a great decision by the KIA to pass on this fund. But these guys were not venture capitalists. They were corporate bankers. No offense to the corporate bankers. But you shouldn't do a VC fund. Just like a VC guy like me, you know, you wouldn't hire me to be your corporate banker. I wouldn't hire you to be a VC either. And so, you know, they messed up. And now this is a lesson. Give the money to the people that know what they're doing. Not because they're their friends or because they have a big sign on top of them that says city or something, right? Okay, next one. So this is the conclusion. Zibda. You know, VC remains the best asset class. VCs drive innovation. Without venture capital, we would not be where we are today. Everything we're doing, your phone, your apps, the way you check on your children, your WhatsApp, your trading, your generative AI, your pictures, your Snapchat, Mghazal, everything came out of venture capital. Everything. And so we will continue to invest in venture capital. And today, collaboration is what happens. So we see a lot of partnerships between sovereign wealth funds and venture capital firms because people do different things better than others. So you want someone to do the early stage, you need to find people that know people in the early stage. And this is the stage we focus on. I see a lot of my LPs here. A lot of them are very happy with what we're doing so far. And I continue to advise you to invest in whatever strategy we're doing next. And very soon, inshallah, we're going to be announcing our Jedi 2 in Q1, inshallah, of next year. And I think that's it. And thank you very much for listening to me and giving me this opportunity.